Hi, John Dobis of the San Francisco Money Show here. I'm from Forbes. I'm with Peter Schiff. He's from Euro Pacific Capital. Peter's been an outspoken proponent of a basically wrecked economy.
Well, I'm
not proponent. Yeah. You argue why it could happen, though.
Right. Well, I just call it like I see it. I'm not, caught up in all this hype and propaganda that comes out of Washington or Wall Street. We're in a lot of trouble. Donald Trump was right when he was a candidate. This is a big, fat, ugly bubble. The economy is a disaster. The difference is it hasn't gotten any better since Trump was elected. It's the same economy. It's the same phony numbers. It's the same bubble. And unfortunately, it's going to pop under his watch.
So if that does happen, if it does pop, if people lose confidence globally in the dollar as a riskless asset, where are they going to put their hard-earned money?
Well, some of that hard-earned money is
or
just going to evaporate into money heaven, because as the dollar plunges, right, people who have dollars, by the time they sell, they're going to get fewer euros or fewer yen or fewer ounces of gold. But people are going to pull their money out of U.S. assets, and they're going to recognize America for what it is. Right? It's not this safe haven. We're not credit worthy. We're really like a banana republic. Our debt is junk bonds. People just don't, connect the dots that should be rather obvious.
Why hasn't it happened yet, though? We've got $20 trillion in debt. We've got receipts of about $3 trillion a year. Why hasn't the collapse come yet? And what will the trigger be?
People were saying that to me about the housing market. Peter, you've been talking about this bubble for years. Why haven't it collapsed? Bubbles get bigger than you think.
That's
but
true.
Eventually they pop and the air comes out. And so why is it taking so long? I don't know. Usually the bigger they are, the longer it takes to pop. I mean, the whole world is caught up in this hysteria. And, they've been able to keep interest rates artificially low, but eventually they're going to lose control. Eventually interest rates are going to go up, and that's going to expose the farce, because we can't pay when interest rates go up. We're too broke. No. We can barely afford to pay now. In fact, we can't afford to pay now because the U.S. government has to borrow the money to pay the interest on the money it's already borrowed. But if the interest rate goes up, then that's it. The party's over. But before that party ends, you got to get your portfolio in order.
What would you do then to protect yourself now, before this rush out of the dollar happens that you think might happen?
You got to look, invest in foreign stocks. Look at emerging markets are crushing it this year, more than double the return on the S&P, and they're still cheap. So there's a lot of economies that are going to benefit from a weak dollar. Also, developed markets. If you like bonds, fine, but don't buy bonds of the United States. Maybe look at Singapore. Look at New Zealand. Keep your maturity short because the rates are still low globally. But you got to get out of the dollar. You got to own gold. Gold stocks are dirt cheap. Even though they're up quite a bit last year and they're up again this year, compared to the price of gold, they're historically cheap. A lot of money's going to be made by people who buy these stocks. Very few people own them now, which is another reason that they're so cheap. But you need to be smart.
Gold needs to get up 50% to get to where it was in 2012 when it peaked, right?
Well, remember, it went from under $300 an ounce in 2000 up to $1,900. And then it pulled back, and now we're around $1,285, $1,290. We corrected. We built a great base for the last few years. Once we take out $1,300, $1,350, but maybe $1,300, we're off to the races.
Yeah.
It'll move quick. If you're not on board by then, you may never get on board. So just buy now. Don't wait for the stampede.
Peter, thanks a lot.